Hey Jeff, hello everyone. Welcome to another video of Simplicity Investment Watch. Today is Tuesday, December 3rd. This is my first video since the Thanksgiving break and obviously first video for December. I'm going to talk about the major market movement that went on today, and then there's a few changes to the buy list. Um, and then we'll get into covered calls that are available based on what I now have on the buy list. But first, the disclosure, we do not give financial advice, and this information is not for investment decisions. This is for educational purposes. The stock market is risky, and any trade or investment is expected to have some or total loss. The use of derivatives increases investment risk or potential loss. Do your own research before any trade. Please consult a financial advisor or professional to determine what is a suitable investment profile for you, given your investment goals and objectives. All right. Let's look at SPY ETF for S&P 500 first. This is the daily chart. This last candle is today's action. Very consolidated action, not a lot of movement. SPY only did 5 bips today, so that's what you're seeing there. Very, very limited. The important takeaway here is that off the most recent high, the anchors that I set from the gap back at the time of the election, the presidential election, and the high that occurred right after that. I have anchored VWAP set off of that. Sellers were in control for a few days at least, and then from this point forward, buyers have been in control. So all good sign. On the intraday action, so these are 39-minute candles. There are 10 39-minute candles to a day, 390 minutes to a trading day. And what this just shows you is the action out of the gate. This is the opening today. Was down, and then as the day progressed, it fought its way back up and to just a slight high, as I just said, 5 bips. The other things I want to see is the Ichimoku cloud is right here. The action is above the cloud. This again, this is a 39-minute chart. So this literally, this blue line is the 50 period moving average, but a 50 period on a 10 candle day translates to a 5 period on a daily chart. So it's the 5-day moving average. I emphasize that because what I want to see is this 5-day moving average moving up. This is the 20 period for the intraday, which translates to the 2-day line on a daily chart. So the 2's above the 5, and then this down here is the 200 period moving average, which translates to, because it's 10, is in a day, intraday, it translates to 20 on the daily. So that's the 20 moving average. So you want the action above the 20, you want the 5 pointing up, and and the 2 above the 5. So you have it all here, and it's all above the clouds. So this is just Green Light City. And then finally, the Lucky 13 indicators, just all showing positive action. So for QQQ, the ETF for the NASDAQ, similar scenario, talked about this on several videos. There's a gap for the election. Then there was a high. I set an anchored VWAP off that high. And eventually buyers took over and buyers are in charge. And that's basically what I'm looking for. All these other anchors from different times, different highs, just all the everything is above, all the price action is above all of these anchors. And on the daily, I have the 200 and the 50, and obviously you want the action above the 200, you want the price action, excuse me, the 50 above the 200. So all good, good, good. Intraday for QQQ, the day action is right here. Let me zoom in on that a little bit. There we go. So again, started down, fought its way up to go positive, down, and the Nasdaq had a little bit better day than SPY. Ended 31 bips up compared to SPY being 5 bips. And most of this action just came at the being up basically pretty much from just shortly after noontime on. It was all on the plus side. As I said with the SP, you got the 5. Well, this translates to the 5-day moving average, 20-day moving average, 2-day moving average, all pointing up. It's all the actions above the cloud, Ichimoku cloud, so all good. And lastly, ticker DIA for the ETF for the Dow Jones Industrial. DIA was down 19 bips for the day. However, really of no consequence. The same thing you were seeing on the other two charts. There's anchored VWAP set off the gap. There's anchored VWAP set off the last high before these most recent highs, and just all the buyers took over roughly the same time in all three of the major markets, and it's just been buyers in control since then. So all indicators are up, and all the price actions above all the anchors that I've set, anchor VWAPs that I set, and above the 200-day moving average and the 50-day moving average. So all the market's in a very good position right now heading into the end of the year. For the major economic news, that's for the balance of this week, today being Tuesday, so we have Wednesday, Thursday, Friday. Wednesday, tomorrow, ADP non-farm employment change numbers are coming out. That's a more widely followed report. ISM service, which basically is supply managers, purchasing managers survey, that's coming out tomorrow. It's estimated to come in around 55. Anything above 50 is expansion or growth. So that's good. And then Powell is going to give a speech or talk around 2 o'clock tomorrow. That could move the markets depending on what he has to say. And we know how we hinge on every single word he says. Thursday, unemployment claims are coming out, weekly unemployment claims. That's pretty much the big event for Thursday. I mean, there are other numbers being reported, but that's the big one. And then on Friday, the big ones are average hourly earnings, month over month, are coming out, the non-farm employment change, and the monthly unemployment rate. So that's usually released the first Friday of the given month. So this Friday is December 6th, and that's when the unemployment number will be released. It's estimated to come in about 4.1%. So anything off of that could be a surprise, could move the markets. All right, so here's the buy list. Basically, everything in green over here is a buy. I have everything in yellow as a hold. Um, a lot of the holds are just simply that the prices move it's just too far from where I'm comfortable that you know it's overextended. Doesn't mean it won't go up. It doesn't mean I'm not wrong, but it's just not the way I do it. So I put them on hold. I'm waiting them. So a few of them I'm noticing they're starting to retract a little bit or come back to the and I have anchors set on them as I do with the major markets that I just showed you. So when I'm watching for it to test the anchors for these various charts, and that's usually a good thing. It comes down to test the anchor, and if it finds support there, the buyers are still in control, and then hopefully it can continue on another leg up, which would cause me to move some of these ones that are in yellow, where I would not take new positions with them. But if they did what I just described, bounce off the anchor or find support at the anchor, I would move them to green. So what is truly a buy right now? DraftKings, I actually just changed that from a hold to a buy. So that's back on the list. Alcoa's been a buy. Devon Energy is a bearish strategy buy, if that's not conflicting enough, but it's a bearish strategy action, meaning you can take a bearish strategy against it, buy or put would be one example, as well as a few other things, but that's for another video. Disney has been a buy for a while. Shopify has been, and today I took off one of my watch list. I took Amazon and I moved it to the buy list, which is right there on the bottom. So for today's date, December 3rd, Amazon has come onto the buy list. So I had this chart for Coupang, CPNG, ticker symbol up on here. It 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 was on the buy list. It's on a hold right now. I've actually had it since like almost literally a month, November 6th. It came on my buy list and it has since gone to hold. I only show this now. This was an interesting story today. So it's a South Korean company, and the president of South Korea declared martial law, state of emergency for the country. Best I could read it was some kind of political play. He was referencing some threat from North Korea, although there wasn't an actual military threat. It just seemed, again, when I read the story, not to get into the whole story, but just seemed to be some shenanigans, if you will, with the politics. But anyhow, he did that in the morning in Korea, and then by the time the afternoon came around for Korea time, I guess their version of Congress basically undid what he did. All that said, it just causes turmoil for the investments within their country, right? So here's one of their biggest ones, Coupang. I had it on my buy list, and it took this, like, it just dived all the way down here. But the good news is, out of this whole thing, it fought back the whole entire day. So even though this was down 3.74%, 374 bips, it fought back nicely, even above this anchor, which was set way back on earnings for May 7th of the year. This red anchor. So it fought back above that. Yeah, it even fought back against the another anchor that I had set on the low just prior to the August 6th earnings. So it's just an interesting story, and this is what can happen, right? Everything's going fine, and then some global event comes along, and thankfully I had it on hold, um, and it remains on hold, and we'll see how this thing fights back. Okay, DraftKings, one of the ones that I moved from hold to buy. Basically, it had this high, I set an anchor, price action was below that, then price action came up. But even when it got above this anchor, it went through this pattern where it had these red down days with these long wicks on the upside. That's not usually a good sign at all. So I have that in a box. Uh, what I really needed this thing to do was test this anchor again, and it came close enough. It really didn't come out quite off and bounce it. Let me move this square out of the way. There we go. So it came pretty close to the anchor, and then it had this doji, but it was a low doji, and then and now it's had a couple of good days, and especially this day today with the wick being on the bottom side like that. I like that. So basically looking at that, I said, okay, it seems to be whatever was going on over here, whatever I had to test, it tested, and it seems to be moving forward. So I moved on to the buy list. Okay, and Amazon was one that I moved from one of my watch list onto the buy list as of today. The high, the most recent high was here. I set an anchor off of that. It was in consolidation back here in late October. And then the price action got above the anchor. And this candle here yesterday would have been a little, again, the wicks to the upside. It's not awful, but it's not ideal. And today is more of an ideal candle that I like to see. So because of these two follow through days, once it cleared this anchor, and now I have 2 days sitting up there. I went ahead and I took it off the watch list and moved it over to the buy list to add it to the list for option considerations. Okay, and then finally, as I've explained in previous videos, I'll take whatever is green on my buy list, natural buy, not on hold, and I load it into an option screener, and that gives me a list of candidates for covered calls. And so I'm looking for the best value in a covered call that I can possibly get off of the stocks that are on my buy list. This week, or at least for today, the overall value out there as far as what you can get, for those who don't know, the bid is what you're not always going to pay literally the bid. You're going to end up paying somewhere between the bid and the ask. But the bid is what you're going to usually pay when you buy something, and excuse me, when you sell something. Sorry, I had that backwards. The bid's going to get when you sell something. So when you're doing the covered call, you're buying the stock. You're buying 100 shares of the stock, and then you're going to sell an option against it to get some premium, to get some money for that. So you own both the stock and you're hoping to make money on the stock going up, and you're selling an option so you can make more money on that. So the bid is what you can sell that option for. So the values are kind of muted in terms of what I've been able to show in previous videos and what I've seen historically. I usually like to see things closer to $1. So, but that said, here we have AA Alcoa, which is on my buy list. It closed today at 45.90. So this is Tuesday, as I said at the beginning, this is Tuesday, December 3rd. This is after market close that I'm talking. So this is the close of the price for, excuse me, the close for the day, $45.90. And basically what this is all telling me right here is that I can sell a contract that expires on December 13th. I can sell a call to someone, meaning I have to give them 100 shares if they want it, at a strike price of $48.50. So if I buy it at $45, $46, depending on whatever it opens up tomorrow, I buy it for 46. Someone could take it away from me at 48.50. Fine. That would be a 5.66% return if they did that to you. But more importantly, right now, immediately, I'm making $44, so that's 44 cents per contract. A contract's 100 shares, so it's actually $44 I'm getting paid immediately just to give somebody the right to take that away. It doesn't mean they'll ever take it away. The price right now is around $46 for AA. If it closes by the 13th at 47, 48, just as long as it doesn't go above 48.50, that person's not going to exercise that contract. It doesn't mean anything to them. I already have my $44 for the 100 shares that they give me. And if I own more than 100 shares, that's 44 times 2, times 3, times 4, times 5, depending on whether you own 200, 300, 400, 500 shares. And so there you go. But just talk about 100 shares. I get the $44. That $44 is already a 1% return. And I've said this before, you keep doing 1% returns every 2 weeks and you're going to be fine by the end of the year. So, so if the shares never get called away from me, so the option, it never gets exercised, or taken away from me, I still get the 1%. I still own the stock. If the stock does get taken away from me at 48.50, between the $44 that I'm getting for selling the contract, which I get right away, and then the appreciation from 45.90 or 46, wherever you bought it, up to the 48.50 strike price, you're basically looking at a 6.7% return during that time. And that's just basically the 13th of the week from this Friday. So you're talking 5, 6, 7, 8 market days. 8 market days, you can make 6% if all that stuff happened. If AA goes down, that's fine. You still own it, but you still get your $44 because someone bought that contract. So you're still making the 1%. So there you go. That was really the best value. Everything else, as you can see here, the return on just the selling the contract, which is basically what this column is, return on if flat, really starts to get minimal. So this was a little bit of a disappointing day to look at this in terms of that, but still, yeah, I shouldn't say it that way because I'm not disappointed to get 1% in 8 days. So there's that. All right, so that's the covered calls for at least for today based on the buy list. All right, and that's it for today. So if you need to reach me, my email is mark@simplicityIW.com. If you have any questions, thank you for your interest. Thank you for your time. Please click on subscribe. I really appreciate it. And just remember, simplicity is the ultimate sophistication. Keeping things simple is really smart. All right, folks. Have a great night. Take care. Bye.